whatever it is, just kind of hang tight. Again, no agenda, and field some questions or talk about whatever you guys want to talk about. So that's what I'm here for. In the meantime, everyone is here. Make sure you go on my Telegram and vote on this question. Either click the thumbs up or the fire. Give me your vote there in Telegram. If anyone is not in my Telegram, then I'm very mad at you and need to be in my Telegram. But otherwise, jump in there and make sure that you vote on that in the meantime. Here's that link just in case. Just in case any of you guys are not in my Telegram. I assume everyone is in my Telegram. Sorry, I'm just moving some stuff out of the way so I can more easily see the chat here, guys. That's why I'm scrambling around here. Hi, Des. Hello. Um, sorry, let me scroll back up and find that question. Doug, on NRG, are you saying the spread is showing it's down, or are you saying the actual price itself? Because sometimes the spread during off hours will show some pretty wonky numbers. So do you mean the actual trade on NRG, or do you just mean the spread values right now are showing? Because I would assume NRG's been, what is it, down only 0.5% or so, even from the peak yesterday. So I don't think that you should be in any danger of the spread actually losing value. But with interest and bid ask, spreads can get a little wonky, which maybe is a good topic to talk about today. I know that's something that actually I have had some questions on, which is like what happens when these spread values are changing, and it is good to make sure that you know the math and all that sort of stuff, so that you're not necessarily as worried about the spread value changing. You are more concentrated on knowing where you stand in the trade. So maybe that's something that we could talk about. But yeah, folks, make sure you vote there on the Telegram. Donna D. Okay, good question there from Donna D. Oh, Doug. Okay, yeah, so it is down then. It's down 1%. NRG's down 1% then if you got right in at the top there, 154. Obviously not a big move. NRG is actually a fairly volatile stock. I mean, not super volatile, but fairly volatile because energy has just gotten a little wider range. But yeah, I wouldn't obviously be worried about 1% in one day there. Okay, so let me start answering some questions. Like I said, don't forget to vote, and then I'll come back to that. But you guys can ask some questions. I'm going to try to figure out if I can scroll and keep track of the questions. That's going to be the challenge of the day. Okay, let's talk about a couple of these. I'll just create a new blank chart here, and I'll start drawing around, and we can go from there. Guys, if you can, try to ask your question as detailed as you can, and then try to only post it once so that I don't get too lost in the thread, and I'll try to catch up on as many as I can. And then when I run out, I'll say, hey, post it again if I didn't see it. Ira, for the income machine, you won't find any trades today because the market's closed, so there is no live option data because there is no options trading, so you won't find any today. But as soon as the market opens Friday, tomorrow, you should definitely find some. All right. Someone asked about getting assigned on a debit spread. This is a very common question. Let me walk you through it. And then a particular case where if you have the dividend, which is a great question, Donna. I know AVGO, we are in the dividend range if you're in that trade. And so you might actually run into that situation in real time. So just for a quick recap, if you guys are in a debit spread, you always have a sold call up here. This is if you're in a bullish debit spread. You have a sold call up here, SC, sold call. You have a bought call down here. And with an early assignment, what happens is someone exercises this call against you. So let's say that this is a $500 strike and this is a $495 strike. On an early assignment, what's happening here is that someone is exercising this sold call and they're putting you short shares at $500. So you are now selling shares at 500. And the way that we handle that is that we then exercise the bought call. Now, most brokers will do this automatically for you within the first few hours of the market open the following day, especially if you're on a margin account. They'll say, hey, you don't have the funds for, just to be holding those short shares. So they'll automatically exercise it within a couple hours in most cases. But if not, you just jump right in there, you exercise it, or you call them and tell them that you want to exercise it. And what that's doing on this side is it's buying those shares at $495 because that's your right as the call buyer. And so when that happens, you are now buying shares for $495 and you're selling them for $500, which means you make $5 a share on all of those shares. And so you're essentially making, not essentially, you are making the max profit there if this assignment happens. By the way, it's the same thing that happens at expiration if you are above the level. Same thing, except for the broker does it automatically to both sides after close. But the same exact idea here, you're getting the full $5. That's how the spread is valued. And so if you have 10 contracts, you'll make $5,000. Now, of course, you paid something for the spread, so you got to subtract that back out. Maybe you paid $3,000. You got $5,000 at close or at assignment, so you made a $2,000 difference. And so then Don asked, well, what happens if they actually assign me here short on an ex-div date, an ex-dividend where you now owe the dividend to the buyer, and it's on the one day where they get you on the short side, but you're too late to reclaim the dividend the next day? Well, then you do owe the buyer side a dividend. Now, for me, I don't worry about this too much. Number one, because it's fairly rare. But number two, if someone wants to early assign and guarantee my max profit, and then I lower that profit a little bit by paying the dividend, that's a trade-off I'm willing to take. In other words, the only way it can happen is if they guarantee my full profit by doing the exercise. And so I say, okay, I'll take it. I'd prefer not to. I'd prefer to get the full profit without the dividend. But if I have to make, I pay $3 for the trade, they exercise. So now I get $5, which equals $2. And then I have to pay 50 cents of my $2 per share back for the div. Then kind of annoying, took some of my profit away, but that only happens if they literally guarantee my profit in the process. So that's the trade-off that I'm willing to take. Obviously, you could avoid dividend dates if you want to do that, but that's kind of the trade-off. So Donna, does that make sense? Peter, I can see your comments. The default in Zoom is that it shows administrators the comments. So I can see your comments. You just can't see everyone else's comments right now. Deanna can open up the chat. I think she's the super host if people want to see everyone else's questions, but I can see them all. iPhone said, I sold the 1210 call. I bought the 1205. That would be correct for a debit spread. iPhone, whoever asked that would be correct for a debit spread. You buy the lower price call, the lower strike call, and you sell the higher call. So that would be correct. Someone asked why I don't really do bearish trades. Mainly because I operate under the assumption that the market is going to go up more often than it's going to go down over time. And so I want to be on the right side of what I believe is the biggest bias overall, which is that the market tends to go up. So to me, the way that I trade, I'm not saying this is the way you have to trade, the way that I trade in most of my strategies, not every strategy, but in most of my strategies, starts with saying, what's the single biggest advantage that I can get in the stock market? And usually the single biggest advantage is a bullish bias because the market tends to go up more than it goes down. So, of all the filters and biases that you can bake into a trade, that is the most substantial advantage that you'll ever get. And so I usually start there in most strategies, especially when I'm doing more of a defensive trade like we do here. Yeah, Donna, usually, especially if you're in a margin account, they will not do it immediately. They'll do it a couple hours or maybe 30 minutes into the session. But I would just call them and say, hey, what are your guidelines here? How does it all work? Should I be watching it? And you know, they should certainly be able to walk you through what their kind of structures are. And same answer there. Anne asked, do we need to respond or is everything automatically conducted by the broker? Most brokers within a few hours of the open will automatically exercise the other side because they know that you don't have the margin available to hold that trade. And so they do, what do they call that? A T call? Is that what they call it? A T margin, I think is what most brokers call it. But usually they will exercise it for you. If not, it's still good to get comfortable doing it because it's really simple. And on most brokers, you're basically right-clicking the option and then choosing exercise. So it's still great to kind of, YouTube your broker and make sure that you're comfortable in case you do need to take any action. Because in my opinion, it's always better to, know what you're doing, even if the broker should handle it. I think it's always great to kind of know what you're doing and be able to be in control. All right, let me move on to some other questions. Dave asked, do I always hold to expiration or can I exit with profit early? Dave, good question. I actually use a target in most of my strategies. So most of my strategies use a limit target that I set as soon as I get filled. So if the market moves enough in my favor, I get out of the trade. I don't actually have to worry about where the market's going to finish. The income machine, and by the way, guys, this doesn't have to be an income machine session. I'm gonna do the income machine demo. We're gonna play the demo for you here in 15 minutes or so, where obviously that'll be all about the income machine if you guys haven't got a chance at that yet. But in the next 15 minutes, we can take questions for any of the strategies or anything at all. It's Ask Me Anything. But for most of my strategies, I do use that limit order because I really want to take advantage of anytime the market moves in my favor, get profit, get to the sidelines. The income machine specifically is different because it is running the numbers based on the expiration date. So it is based, Dave, on the idea of what are the probabilities at this expiration date. And so for the income machine, my default actually is to let it go to expiration and try to get the full value of the spread because I'm taking a trade based on those probabilities to begin with. But for you guys, I mean, I know a lot of people have already said they're going to use the income machine and they're going to use targets. And I think that's great. The only thing I ask is that you send me your results. Let me know how you're doing and how it works. Because I think it's still a great strategy. I love using limit orders. For me, I'm a big fan. Evan, I didn't notice that actually. Great comment there. I will add that to our update requests right now. Let me find my doc here and I'll get that added. Thank you for that. Let me just get my doc going here. Here we are. Perfect. Thank you, Evan. All Peter, is there a way to choose or a way to look at how many days the market went up? Yes, there is. There is some good research on that. It would take me a little bit, Peter, to dig it up because I've used it in some of my other research. Um, I want to say it's in the mid 60s off the top of my head, but there is some good research around that. I will try to track it down for you. Donna, correct. The income machine will only find bullish opportunities. It will find lots of cushion on those bullish opportunities, but it will always find bullish opportunities. Okay, so if you want to cash out, if you want to use a target, we call that a good till canceled limit order. Okay, I'm not sure. I'm not sure your name. It just says user here, but who asked how would you do it? We call it a good till canceled limit order. So let's say you're in a spread that's has a potential value of $5. Okay, this is going to always be your max value on a $5 wide spread. So again, you sell the 500, you buy the 495. The max this trade can ever be worth is $5. So let's say that you paid $3 for it and you want to get out early. Well, what you would do is you would set a limit order somewhere between $3 and $5 because you want to make money on the trade, obviously. And so maybe you're in a situation where, hey, if the stock bounces up 2%, even if it's very early in the trade, you want to get out. Well, you could set what they call a GTC. That means good till canceled, GTC. And you could set it at like a $4 credit because we paid a debit. So we always want to get a credit when we close. So what you would do as soon as you were filled for $3, or really any time after you were filled for $3, you would actually create a closing order. So even though you're not closing it right there in that moment, you would create a closing order. You would put in a good till canceled limit, and then your broker would hold that limit. They call it a working order sitting in your brokerage that anytime that spread becomes worth $4, it'll close you out of the trade and settle those funds, and you will no longer be in the trade. You'll have paid $3 and you have got $4 back in credit for a net profit on the trade. So that's how you would set that up. Every broker is a little bit different on how they do those, where the closing order menu is and stuff like that. But it's all the same idea. You get filled on the trade, you create your closing order ahead of time, and you just tell it the limit that you want to get filled, and then that limit will be working in there. MCP, I mentioned a tool that we would give. I'm not sure, MCP. Can you give me any more details on what that tool discussion was about? Oh my good, Mark, you have 12 trades under your belt already. That's awesome. I've got a Mark. I'm going to take down. I'm going to take down your note. That's awesome. Uh, Davin, I'm not sure if I'm saying your name right there. The first thing I would do is check out the two master classes that we have on the income machine. They're both now recorded and in the members area. Even if you're just doing it for free, trying it out for free, you can still get full access to those. Barbara, no, putting in a good till cancel limit won't change any of the likelihood of assignment. It will only change it if you get filled before that. Okay, two of you asked for the debit spread versus the credit spread conversation. We actually had two of them. We had one with Chris and I, where Chris really talked about how he likes credit spreads, and then there's a different one where I really talked about how I like debit spreads and a couple of the reasons. So I will. By the way, guys, let me mention something real quick here. So let me show you this real quick. All right. So if you guys go into the opening playbook VIP area inside One Click Trading, this recordings link takes you right through all, right to the YouTube stream page with all of the recordings right here. So if you click that, it'll take you right to all of these automatically for all of you wanting the recordings. That's just literally right from the membership area in here. And even better than that, you can also get the slide presentations. Okay. So this is really cool too, because you could actually go through our slide decks. Like if you want to go, how do I learn about the fade trade? Well, the entire presentation is in here that you can go into. So, what about the money flow? What about automated exits? That's all in there. So for all of you guys asking, hey, how do I get a recording of this? Hey, what did you say about that? That's all right here in one place in the opening playbook VIP area. If you just want to go in there, master classes are in there, telegrams are in there. I mean, all kinds of stuff is in there for you guys. All right. Let me get back into the chat here. Cynthia, yes, great point. When I talk about assignment, I'm talking about early assignment. Obviously, if you're at expiration, you definitely want to be a little more careful, because if it expires between your strike prices, then you only have one side. Yep, we record all the sessions and they are available. And yes, guys, we for those of you asking about the income machine demo, we're going to play the entire presentation right here in the same room. You don't have to go anywhere or do anything. Deanna, do you have that $1 link? So guys, this that members area I just showed you is the $1 thing. If you guys didn't hear about this, so Graham and I do opening playbook for free. It will always be free, but we give lots of trades. We put a lot of presentations together, and we wanted to have a members area to kind of hold all of that. And our tech team said, well, you have to charge something to officially make it transactional so that we can provide transactional alerts, access to the members area, and all of that. So we charge $1 for lifetime access to this members area just to make it official. And so we can send you transactional emails and alerts, and you can get all this stuff. So that's when I refer to this opening playbook VIP, it's not really a product. It's just a way to hold this stuff. And we charge $1 for it to get access. So Dion, I don't know if you have that link handy. If not, I can find it here in a minute. But that's what I'm referring to. This is that whole $1 thing. It's just because we couldn't make it free, so we had to charge $1. All right. Let me reject. I can't do a trade using Thinkorswim right now because the market's closed for Juneteenth. So I can't do a live trade today, but we usually do live trades almost every day on opening playbook. So join us pretty much any other day, and I will do a live trade. MCP, do I take trades with multiple strikes on the same stock, like with the income machine? No, I don't. I pick whatever one is the best real time. I set up a limit. I try to get filled. If I don't get filled, I move on. If I do get filled, that's the one I stick with. The income machine will then bounce around and find a new opportunity every moment in time, because it's literally combining millions of combinations of trades. One moment this strike might be slightly better. The next moment, because the price went up, this strike might be slightly better. So it is going to update in real time. But I encourage people, don't get caught up in that. Take the one in the moment that you're trading, and then if a different one is there 10 minutes, don't worry about it. That 10 minutes later it might be a different one. That's totally fine. I would recommend focusing on the real moment in time that you're trading, get filled on that one, and then if you want to trade a different stock or whatever, then obviously you can do that. Roy, I've had really good success so far getting filled on pretty much every trade. Now, every once in a while, I've had one that was, um, a lower interest one that I didn't get filled. But for the most part, like yesterday, all the trades we took, I think everyone got filled lower than the price the income machine recommended. I'm not saying that will always be the case. It will bounce around. It's obviously complex, nuanced situation. But I think yesterday every trade we took was lower than the mid price suggested by the income machine. Uh, John, Thinkorswim web based. I have not actually used the web based, but I can try to figure it out. Dave, I use Schwab, but I use the Thinkorswim. I use the actual, downloaded Thinkorswim platform. Susan, which slides are you referring to? Right now, I don't really have any like extra trainings on the income machine. I just have kind of our master classes that are more Q&A. Oh, Davin. Okay, so what you want to search for, is it Davin, Devon? I'm sorry, I want to pronounce your name right. What you want to search for in your email is one-click trading. I'm typing it to you now because that's where you'll kind of authenticate your membership and be able to get access. Do I have a class on bull and bear call spreads, including the whys and the calculations? Yes. If you are in here, you'll see a couple of these are not fully on that, but like this one that we did with Chris was about credit spreads. I did one previously that was more about why I like debit spreads, and then actually yesterday's class is probably the best class I would say on why I use the specific kind of debit spreads that I use. So if you guys want to check this one out, this was yesterday's. That one is a fairly deep dive into a kind of how I trade, specifically what I would call like defensive trades. George, it really depends. So George had a great question. George's question is here. I'll put George's question on. I should have done this earlier. Just put the questions here in the chat so everyone can see it. Okay, there's George's question. When executing the spread, should we not be limiting our cost to 50% of the spread, i.e. $5? Don't pay more than $250. So George, the answer is, for me, it really depends on what you're doing with the trade. So paying like half the trade is what Graham and I would call like an aggressive trade, a wrap order, something like that, where you're going for 100% gain. And if you're trading right near the current price of the stock, you probably don't want to pay more than about 50%. But if you are going for like a more conservative trade where you're giving the stock plenty of room, then you're not going to be able to get in for 50% of the spread. You're going to pay a lot more. You might pay $4 for a $5 spread, or even $4.20 for a $5 spread, where you don't have as much meat left on the bone. So it really depends on the situation that you're in terms of how much meat on the bone you want to have. On the flip side, I use something I call jump trades, where I'll usually pay much less than half. I might trade a $5 spread where I only pay $1.80, and I'm going for like a 300% win. So it really, because I'm going for a big directional move. So it really depends where in that kind of scenario you want to trade. Now the income machine is exactly for that. It's kind of giving you different paths based on how aggressive you might want to be in running all the different calculations. Thank you, Stefan. Appreciate that. Um, Very kind words. I'm yeah, as excited about it as anything I've ever been. All right, let me scroll back through here. I know I skipped over a couple questions earlier. Sorry, I'm just scrolling through the chat here. Okay, good question here from Doug. Let me post that one. Okay, this question was, are there any industries you would avoid with the income machine in this environment? The short answer is that no, I wouldn't avoid anything in particular because the income machine is doing all of the stock analysis for you. So it's already by its nature going to, filter out all the stocks that I wouldn't trade, a certain amount of volume, trending, all that sort of stuff. Now, within that, I think there are lots of cool ways to use the income machine, Doug. Like, for example, take Graham's seasonal picks and then say, okay, I really want to focus on the sectors that Graham likes in the seasonal stuff for the income machine plays and try to kind of hone it in more. So I think there's lots of layers that you can add on top of that. But I think for generally speaking, no, because the income machine itself will already filter out the stocks that I want to trade. David C. Yeah, support is open. You can give them a call if you need help making sure you're accessing the right thing and all your access is set up. Absolutely. You can definitely call them today. Deanna might have to give you the number. I don't have it right off the top of my head, but they are open today. Okay, so if you want to see how the income machine works and how to get access to it, we're going to play that here in about 5 minutes. I know I said 30 minutes, or I said 15 to 30 minutes. We're 33 minutes in. That's how it goes every time. But we will get to it here in a minute. Doug, for the seasonal picks, Graham covers those pretty much once a week for free in the opening playbook, what sectors he's watching, which ones he expects. So that would be a great way to kind of say, okay, Graham really likes health and technology the next 2 weeks. So I'm going to look for more health and technology stocks within the income machine as an example, which I think is a great thing to layer on. There's lots of ways you can layer onto the income machine, which is one of the things I really like about it. Okay. Bob asked this question. Why aren't the spreads working today so we can practice? Bob, because the market is closed right now, so there literally is no option data live. No options have live data feeding in, so it can't find any spreads because the market itself is closed. DP, for jump trades, yes, I can find the link for jump trades. Give me a minute to do that. Mark asked about this. Let me grab Mark's question here. A lot of income machine questions. That's cool. Could I give an explanation of the 5 criteria? Mark, you are maybe the 3rd or 4th person who's asked about this. So obviously people want that. And I am about 85% done with a strategy explanation report that I will be uploading today into the members area for you. Bob, it will show you some spreads maybe like 15 or 30 minutes after the market with the last data that was pumped in. But when it's doing this strategy check, like if you click this choose income strategy button, it's just gonna try to tell you, hey, I look for spreads, but there's no option data coming in, so there's no spreads found. That's gonna be the default, whenever the market is closed. But if you're checking right after 4 p.m., it'll have some recent data and it'll try to give you some. Jimmy said, why can he only see the top of my head? I don't know, Jimmy. You should see my face. Manny, yes. So Manny asked, does it find the stocks for you? Yep, Manny, what it does is it searches and it finds the top stocks automatically for you based on 5 criteria. So if you click this, you'll see these are my 5 criteria: short-term trend, long-term trend, snapback position, weekly momentum, and stabilizing, which is probably my favorite criteria, a little custom ATR criteria I built. and it ranks all the thousands of stocks against each other on those 5 criteria and spits out the top ones. Okay, LK asked this question. Let me answer this one. Can you briefly explain how the income machine chooses the best options? What are the factors it considers? Okay, great question, LK. Let me give you the brief version of this because it would be a very long explanation if I went too deep. But basically, I gave the income machine 3 boxes. Okay, I said, here's a conservative trade, here's a more balanced trade, and then here is an aggressive trade. Oh my goodness, I just realized that's ABC. I didn't even do that on purpose. ABC, how about that? Conservative, balanced, and aggressive. ABC. And I said in the algorithm, in the code, here's what we want for a conservative. We want to get a certain amount below price in terms of protection, what I call cushion, like I talked about yesterday. We want a minimum amount of ROI, and then we want the highest probability based on the most ROI. So basically, we want the balance. So what the income machine does is then it goes in and it says, okay, 30 days out, I can get 5% below price, and that'll pay me 12%. Okay? So I can get 5% of cushion, 30 days out, 12% ROI. But I could get 37 days out and actually get 6% of cushion, a whole extra percent for, sorry, let me get this box out of the way. There we go. For 11.6%. And that's what it's doing in real time. It's saying it's comparing and combining these. And it's basically saying, well, for 7 extra days and a whole extra percent of cushion based on the ranking criteria, 11.6% is actually better than 12% because the probability is much higher because of that extra 1% in cushion. And then it's doing the same thing on balance and the same thing on aggressive, combining all the different strikes, all the different rooms for error, all that kind of stuff, and saying, okay, based on the ranking, which one is the best bang for the buck relative to those different situations. I know, Bugs. Now I have to, you're right. Now I have to reverse it. That's Todd in the chat saying I have to put it ABC now. Never even crossed my mind until I just wrote that down. Now it feels like I have to flip it simply based on that. Becky, yes. So this is what we're talking about right now is the income machine. That's this tool. And we are going to play the entire presentation right here in this room for anyone who hasn't seen it yet. So just hang tight 1 minute and we will go ahead and walk through that. Let me just give you guys 2 more minutes for any final questions. Also, do you guys like this kind of Q&A type session where there's really no lesson prepared every once in a while? Just kind of a free-for-all. Is that helpful, or do you guys really want more of a tactical training every single time we go live? All right, cool. All right, we'll try. Then maybe we'll do more of these, like on a day where the market's closed or we don't have a specific agenda. Just still go live for a half hour, 40 minutes, and field questions. Oh, great question here from Ron. Let me add this one from Ron because I actually got this question quite a bit. Maybe we'll end on this question unless I see another really juicy one here in the next 2 minutes because we've already kind of gone through our time. So the question is, does it look for a minimum amount of open interest and volume with the strikes? Great question, Ron. The answer here is actually kind of a surprising one. The answer is no, because I actually don't care a whole lot about open interest. Now, no one turn me into the authorities yet when I say this, because this is a very unpopular opinion that I don't like. I don't care a whole lot about open interest. Now, I do rank them based on volume, so that you're still getting stocks with more volume, because that's going to make the spreads a little bit tighter and things like that. But I actually don't care a whole lot about volume. Here's why. Okay, let me tell you why. If the trade is a good risk reward and it meets all the criteria and I like it, then I will try to get filled at the price I want to get filled at. If I don't get filled, no harm done, right? If I do get filled, so there's no open interest at all, I don't get filled at the price I want, what happens? Absolutely nothing. If I do get filled at the price I want with the risk reward I want, well, at expiration, as long as it's above my line in the sand, I'm guaranteed to make the money. It's not like the open interest stops the trade from winning, because as long as it expires above that line in the sand, I am guaranteed to get exercised on both sides and make the full profit. So the idea that the open interest is somehow going to come back and bite you, I don't really think so. As long as I get filled for the price I want and it finishes above the level that I want, I'm going to make the money on the trade. So my answer here, a lot of people freak out about the open interest. I get it, but just don't pay more than you want to pay for the trade. And in my opinion, that pretty much solves the challenge with open interest because of the way the trade actually works. So again, that's my answer. It's an unpopular answer. Take it or leave it, but hopefully that answers your question. Ron, for me, that's how I approach the whole open interest question. Again, I'm not normal, so you don't have to listen to me. That's just how I do it. For me, great question. What is my favorite chart? That was this question here. What is my favorite chart? Weekly charts are my favorite charts. So I'm a weekly chart guy. To me, it gives me the best balance of taking out noise, but still being reactive enough to what's going on in the market. And because I'm such a data nerd and I've done so many tests on, price action, I know that a weekly close above the previous week, what I would call momentum, a weekly momentum, is one of the best signals you can get in the stock market. So for example, you take Apple and you look at, okay, how many different ways could I trade Apple? I could trade it based on a moving average cross. I could trade it based on support and resistance. I could trade it based on Fibonacci pullbacks. I could trade it based on earnings or fundamentals. One of the absolute best ways to trade Apple is simply a weekly candle closing above the previous high, because weekly momentum is very powerful. So hopefully that answers your question. I'm a weekly chart guy. Jeremy, most people will tell you that more open interest is better because it means there's more liquidity in the stock. And I wouldn't even disagree with that. I'm just saying I don't really care as long as I get filled for the price that I want to get filled for. That's what matters to me. Can I get the trade that I want? That's what I care about. Eduardo asked about smaller spreads. Yeah, we've got that question quite a bit. Usually the income machine will have at least one trade that has a tighter spread, under $200 stock like TXN. Every once in a while, there'll be more high-end trades, but we will look at doing some filters here. Full transparency, Eduardo, I'll probably only do the filters on the VIP version of the tool, just because we're already doing the pro version. It was already more than I was going to kind of release initially. I really want to save the more kind of premium feature upgrades for the VIP members. I just feel better about doing that for the people who are all in for those really custom dev work. That's going to cost more money and all that kind of stuff. And so I just want to do right by my VIP members and try to make those customizations more in that version of the tool, full transparency. So that's probably the direction that will go. Just again, kind of being honest with you on how this thing is going to progress. And yeah, you can always upgrade to VIP. It's not like you're locked out. I don't mean that. I don't mean you're locked out. I just mean for the people who do upgrade to VIP, that's really where most of those feature upgrades will probably happen. All right, folks, I have gone on a little bit longer than I planned. Thanks for jumping on today, even with the market close. Thanks for all the great questions. We're going to play the income machine presentation for you right here. So if you've been living under a rock and you haven't heard me talk about this beast of a tool and you want to check it out, you can check it out for free. First time we've ever done something like this where you can actually try it for free. So we will walk you through that, play the entire presentation right here in the Zoom room. You don't have to go anywhere. And if you want a chance to check it out, not only can you check it out and use it, especially tomorrow when the market is open, But we'll also have another live trading class tomorrow